All right, we're live. Welcome, everyone. Welcome to the 5ers live trading room. We got Alex here.
Very unfocused camera.
The unfocused Alex. Right, how you been? It's been. When was the last time you were on the live? Last week, I believe. Last Tuesday, right? Wednesday, maybe.
I think so. Yeah, definitely.
Something like that.
I'm gonna try and sort this camera out soon. But yeah.
Yeah. Well, we see who it is though, so it's all good. How are you, Victor?
I'm doing fine. How about you guys? And about everyone watching us right now? How are you guys doing today? We have some major news actually, so it's exciting to see how the market reacts to that. So, if you've been trading today, let us know in the chat, and we will be digesting the news together.
I'll be back in a sec. Let me sort this camera out, and I'll jump back in. I can't. I've got glasses on. It's still blurry. I can't do this.
Yeah.
I'll come back in.
Sure. Yeah. Okay. So that's right. We did have some exciting. Well, wouldn't say exciting, but we do have some events going on in the market. So what we're going to do today is we do have a packed schedule of things that we're going to be talking about today. And the first thing that is coming up is the CAD CPI numbers. We're going to be looking at that. So for those of you who don't know what the CPI number is, that's basically the inflation. That's the core inflation rate and the inflation rates. So we're going to be talking about that. We're going to be looking at I'm going to be focusing on the USD CAD chart, look at different examples, different scenarios that might play out. And then I'm going to be updating you guys on the positions that we entered yesterday and that we talked about yesterday as well. And of course, we have to look at Bitcoin. We're going to look at gold and of course, the dollar currency index and all of that. And we're going to look at some potential seasonality patterns as well. So if you are on a high stakes account, you cannot trade 2 minutes before the event and 2 minutes after the event. And actually, this rule is set in place because we don't want people trading the news on the high stakes account because it's high leverage, and it's just too risky for the risk department to have people trading these highly volatile events with high leverage. So if you're asking that question because you want to trade the news event on a high stakes account, well, think again, right? Because you shouldn't be trading these news events right on the volatility that comes on the release. If you have a high stakes account and you want to be trading these news events, maybe look into trading the fading the initial move or something like that. That usually comes, a trade setup on that can come 20 minutes after the news release or even 1 hour after the news release, because it's just way too risky. Trading the news releases. We don't want any of you blowing your accounts on here.
In short, it's for your own good. It's to protect you as the
to protect us. We gotta be honest. It's to protect the capital of the firm as well. It's basically a rule to put in place as risk management. It's so people have this conception sometimes about these prop accounts being your account, and then you can trade it however you want, but it's obviously connected to a pool account that is traded, so it in the back end it's actual real money. So we have to apply risk management rules, because the capital that you're trading is the company's capital that needs to be managed. Just in like with any other hedge fund or prop firm, there has to be risk management rules in place for the people trading the capital. Let's go over to the charts right away, because I want to look at the USD CAD chart and look at a couple of examples. Go to USD CAD. See if I have that on. So this is what I'm currently watching. So let me do more of a zoomed out look here on USD CAD. And as you can see here, looking at the weekly, we have a massive resistance level right here. Going down to the daily, we do see that it's breaking out. So at the end of October, beginning of this month, we saw that massive breakout and a retest of the breakout level. This was around the Trump election that we had that retest. So you see that volatility where you're coming down and then bouncing off and having a very, very strong daily candle. And we're not trading quite far above this general resistance. What I'm watching is I'm not going to try to think, what is the most probable numbers for the CPI or something like that. I'm not going to try to predict, if the numbers are going to come higher or if the numbers are going to come in lower. But I'm trying to see what would be the most probable setup. And to me, what I'm watching is first we have the daily bearish engulfing here. So we have a big up move. We have a good level to the downside here. And we're currently printing a daily bearish engulfing candle where we printed that yesterday, right? And then we go to the 4-hour and we see that that's just a massive 4-hour candle right there, which I believe could have broken the trend here. It looks like the trend is broken. We add a horizontal on here and we see that we're just now getting the retest of that one right there. So if the CPI numbers come in higher, I'm looking at USD CAD lower. Now, this also means that if the CPI numbers comes in higher, we're looking for a move on the Canadian dollar to the upside, which means we're basically shorting the USD versus the Canadian dollar. And I also want to look at the dollar currency index because if we have this idea, we want to see where the dollar currency index is. If we're going to be shorting the USD, we want to make sure that the dollar currency index is not at support. And if we go and look at the dollar currency index, if you guys remember from yesterday, we're obviously at resistance, right? We're trading at a very high time frame resistance for dollar currency index. And not only that, but we also have a possible change of structure with a top formation being put in on the dollar where we have a distribution range at high time frame resistance right here. And we're currently right now seeing a break below and a retest of that area right here. So this tells me that we might be in for a move lower on the dollar currency index. And if we go out to the weekly, this just looks like it wouldn't be normal for price to just break straight out. We're most likely going to see a rejection. We had the first level here, so maybe we'll see a rejection down to that level. And if you go back to USD CAD, that might be this level. So the most probable trade, or what I see as the best trade, would be to see the CPI numbers for CAD CPI that's coming out in about 20 minutes to be higher than expected. Because we have that USD weakness currently, or the possible USD weakness fueling that move to the downside. Now, another move would, of course, be a reclaim of the range highs. So imagine that the CAD CPI number comes in lower, then a reclaim of this level would be a simple lower time frame break and retest up to this level right here. That's the two scenarios. But I do feel like the risk to reward, but the obvious trade is to the downside here on USD CAD. What do you guys think? And let me know in the comments, by the way, if you have any plans for this or any way that you're potentially trading this.
No, I like I definitely like the look of dollar being at the top of the range, and it's already shown on lower time frames that kind of range that you were talking about, the distribution kind of characteristics playing out. We've got a break of that, so anything against that, we can start to see things pulling back a little bit. So anything probably Kiwi against the dollar, maybe we'll see a little bit of euro against the dollar coming up for retest. So those, as day traders, we can get in some really nice trades. I'm looking at Kiwi dollar now to see if I can get into a trade for it just to break up of its top of its range. That could be the play at the moment. It looks really good. So
And what we see here is potentially a bull flag as well.
Exactly.
This is a nice one.
Break.
Have-
It's had its range. We've had
we could
break,
potentially be
retest.
this, or yeah.
Yeah. I'm just trying to get in the trade at the moment, so I don't really want to. Soon we're going to have a little bit of volatility coming in. So if I can get in now on just a little bit of the next candle that comes down to take some orders, that is exactly the trade that you're looking at now. That's the trade that I want to be taking. I just want to get in at a slightly better price than chasing it now. So if I can get a candle just to come down, let's have a look. If I can get a candle to come down about 5 pips, and then I'll look to get in that with a stop loss underneath the low.
Yeah, I like that. That looks, NCD/USD looks like a possible trade. It's a very clear resistance. This could also be, I mean, this could be traded on as a breakout trade as well, because you already have that. You already have the momentum here with the break and retest of
Yep.
this area here. So you already have that momentum. So this could definitely be one of those breakout trades where you're taking with a tight stop loss, you might actually be able to just make it up to that level. So on the 15-minute, yeah, I mean a 15-minute candle close above here. The problem here though is really be sure you want to see it close above that level, and then the risk to reward kind of gets diminished.
Not there, so that's why I'm waiting for price to come down a little bit further, because obviously you've got that top trend line which is acting as resistance. Now for me, I'm looking at that for now until I find resistance, come back down for an inner higher low, and then get in that inner higher low to take it to that next level that is above the trend line and the level that you've marked out. So
yeah,
that's the play.
Let's see. Let's go through some.
Yeah, I think if I may show my chart, if we look at the Dixie, right, it's the dollar is in focus all these days, has been in focus. We are on the higher time frames. We are currently at a supply zone, but what we expect, right, if we zoom in, we have come with a lot of impulses from this outside bar. We haven't had any retraces on the weekly time frame, right? It's been very impulsive, very bullish for the dollar. But currently we are in a supply zone. So I'm keen to see if there's any pause in that dollar strength. But if we go to the daily, I don't see it. At least not yet. I would expect, before I start believing that dollar's gonna take a step back, I would want to see some candlestick formation that indicates that, at least on the daily. But I don't see that. What I see is that the price as of now is still holding on to this supply zone. It's not breaking down, meaning it might be just ranging, consolidate before it continues, because this dollar strength is very. I don't see any weakness in it. So to me, it's very bullish. So I wouldn't be thinking otherwise until I see it on the charts. I think dollar strength is the way to go until proven otherwise.
Mm-hmm.
Yeah, but I mean, we can also have we can also have a major retrace and still be overall see overall dollar strength on the higher time frames, and the long-term trajectory for the dollar might still be bullish, even though we're getting a significant pullback. So I think I mean, my idea here of seeing dollar strength continuing at least till the inauguration date on January the 20th, that is still in line, even with a pullback here on a daily, from a daily perspective, we still have that strength. So I feel like from an intraday perspective, we might see that dollar weakness coming in and then reclaiming the breakdown level in a couple of days. But I also feel like a sustainable. This is the thing with trends, and if I can open up my chart here, we can see that if a trend starts accelerating, like what we know with trends is the more momentum a trend has, the higher the chance of it ending sooner is. So the higher momentum, the sooner it ends. The slower the trend develops and the slower it moves, the longer that trend probably holds because it's more sustainable. So if you look at a trend where you have something like perhaps something like this, where you have like parabolic trend lines, you can add, something like, now I'm not sure if I did this correctly, but you have trend line that kind of goes,
with big curvature, like a banana. If you're looking at a parabolic kind of, I love the way that we're talking about this because it's so, now it's actually actively happening in the market. You can see Bitcoin has gone on a parabolic move, and it's more like you're doing with the trend lines, but it's like a banana shape. You see that kind of curvature. That would
we can
like
look at gold. This is exactly what we had in gold. This one right here, if you zoom out. Yeah,
there you go. That's exactly what it is. Yeah,
and gold is a great example because it's I remember a couple of live streams ago I said parabolic banana confirmation. So a couple of days ago I said parabolic trend lines, but the actual the actual name, the actual definition is accelerating trend lines. So when you have accelerating trend lines, which this is right here, you will see that it's going to look like this, and eventually they're going to break. So you have a curvature and you have accelerating trend lines, and the steeper the angle is, the bigger the chance of it breaking, because eventually you'll have a, what is it? Is it not 90 degrees? It's 100. Help me out, Victor. What's a vertical? You basically have a vertical line. It's basically
90. 90 is going straight 90? Up, but 90 is going straight up. But what you're saying is the higher the rate is that the price is going up, the less likely it is that it is sustainable, right? The less sustainable it becomes, because you have to increase the moves all the time, and that's not sustainable in the long run.
Yeah, let me take you to the dollar currency index right here. So this is on the weekly. Like, we do see that we fluctuate obviously between range lows and range highs, and sometimes we do have these weekly almost parabolic moves where it just goes straight up. It happens twice within this range, and this is the first time, and then this is the second time. But healthy price action is, I mean, you look at this one right here. This is just one. This is on the daily. One straight move from the low, breaks above range EQ, and then reclaims range EQ, and one straight move to the upside. That has not happened in this range even once. I mean, here you do see higher highs and higher lows, right? And all the other moves within this range has swing points. This move has no swing points. It has one high and one low, and then it's basically just a straight move to the upside. When I see something like this, this tells me that either this is an extreme outlier and we're just going to continue higher, or, and I kind of refuse to believe that, because the momentum is just not there at this point, and we're reacting to resistance. So either this is an outlier, or we're going to have to see a retrace.
Yeah, but then again, on the fundamental side, we are in not so average circumstances, right? We're
going to talk about, well, actually, let's talk about that fundamental just a second, because this morning we did have news coming out that, okay, so on Sunday, Biden told Ukraine, basically allow them to use long range missiles to on targets within Russia. And today, or the night till today or something like that, they launched 6 missiles. Russia managed to shoot down 5, but one of them hit a military installation and caused damage to a ammunition, whatever. And So that's an attack, right? And that obviously accelerates potentially accelerates the conflict. I would say definitely accelerates the conflict in the Russia-Ukraine situation. And before this, because of the announcement that Biden did, Putin changed the nuclear decree, saying that if it's very clear that a foreign, other nation than Ukraine is allowing Ukraine to use weapons just in this way, then there's a possibility of using nuclear weapons. So obviously, when that news came out, we did see a sharp drop in the equities markets. We can look at the S&P 500 here, for example. We had basically the news coming out here, and then it just around this time right here, and then it just shoots straight down. So we had a clear risk off move at that time. We are seeing the S&P 500 kind of recovering here, but we're nowhere in a safe area. We kind of have to reclaim, I believe, this level here to really see that strong push to the upside. And while that happened, we also see the dollar currency index at the resistance. So even though we are right now seeing a market that is heavily favored towards USD strength, probably because of Trump coming into office and the tariffs that he's most likely going to put on Europe and China. That's going to most likely strengthen the dollar. And because of that, because of the Trump coming in office, we also see risk on. So we see equities rally. But with this news, we do see a shift to risk off. And we have to be mindful of the messaging and the wording that Russia is going to use when going out publicly talking about this. Because if they are way too aggressive, then we're probably going to see a push to the downside on risk, and that will most likely drive the dollar higher, but it's also going to drive equities lower.
Yep.
So it's an interesting scenario that we have here. Now I'm continuously looking at the news, trying to figure out what's going on here, because I do have quite a big position open on the S&P 500. You do see that it went into break even here, so I actually did manage to de-risk, sell about half of my position here at break even, because honestly the position was way too big, but it just looks so good. I mean, it just looks so good, and then all of a sudden this happens. It's just so that's trading.
I don't think it needs to be worried too much, because a lot of these, especially when it comes to the indexes, a lot of this very black swan news gets bought up really fast. So unless it's something that truly affects, I think the markets have already had in their mind that something like this could happen. So I don't really think it's going to affect it as much as something like COVID. COVID, really nobody expected or could project that actually happening, and the quantitative easing the government, the Fed did as well. Obviously, nobody could expect all of that as well. So this has been going on for nearly 3 years, and a natural escalation could be something like this. So I don't think the markets are going to be affected too much. That being said, gold is still, the go-to asset for risk off, and so is the US dollar. US dollar is still super strong, and gold is super strong. So I hope.
And what's strong? What's
and
probably
interestingly, Bitcoin as well. If you look at
Bitcoin is the strongest asset in this scenario. Look at the daily. I mean,
it's interesting why though now, because it never used at the moment. Are we seeing a different? Because Bitcoin does change. The way that people look at it has changed quite a lot over the years. It's sometimes been correlated with gold, other times it's been correlated with the S&P 500. Now is it correlated as something risk off, where people are trying to hold their money to fence off any kind of volatility? That would be very interesting if it is like that. I don't know if we're there already. I just know there's a lot of buying of crypto just in general from a lot of institutions. You're seeing Saylor, he's constantly buying. billions of dollars worth of crypto. Maybe when all of that buying is gone, who's going to buy at the top of here other than institutions? I don't think there's enough
I think he
people coming in to buy all of that yet. I don't know.
But isn't this like the perfect storm for Bitcoin? Because when we have risk on, Bitcoin goes up. When we have, like today, risk off, Bitcoin goes up. So it looks like it can go down. Whatever happens, it's gonna be the solution. Although in reality it isn't, but it looks like it as perceived as the solution in any case. Bitcoin to be a good investment for the market.
Well, I think when it comes to Bitcoin, like everyone, like nobody cares. They're like, okay, nuclear war, who cares? We're going to create a natural reserve of Bitcoin. Like, I honestly think that people are so focused on the US narrative here, the fact that Trump is coming in to the White House with Elon Musk, and they have like a task force called Dodge, and it's like they're talking about how they want to put add Bitcoin to the national reserves. They're talking about, it's just insane. It's just absolutely insane.
How could we, all of us, just talk about Doge on stream about, look, Doge looks like it's breaking out, and none of us actually thought to think about the fact that Elon Musk and Trump are so pally together.
Yeah, it's insane.
I didn't think about that.
One of my biggest
mistakes. Into jump on more and buy Pepe, because I've always been in and out of Pepe and never held it through something like this, and it's all gone to all-time highs again. Imagine
if you used, when you started talking about Pepe, when you started trading Pepe, imagine if you just bought Pepe and then just held it.
So the story with Pepe, I remember seeing when it first came out as a meme on Twitter. The first on decentralized exchange, it went on there. I bought it. I put a nice amount in. I did 6x. 6x was enough for me just to take it all out. It then went another 10x, and I died.
Wow.
It's gone 20x from there,
That's insane.
So sometimes the people, especially with things like crypto, which is different from currencies, because currencies have to range. Currencies go from one level to another level, and if you have a look, they've gone from those levels for the last 20, 30 years, They're just ranging between each other. When you've got something like an asset or a bit like a business.
1 minute to CAD CPI.
Go for it. Crypto, those things, if you've got what's the word where you've got an ideology behind it, or if you've got backing behind it, it's not a bias, but you believe in it.
Conviction.
Conviction. When you've got conviction, you've got an idea. Sometimes it's best just to hold that through, and that's the playing with positions like that is going to leave a lot of money off the table for you. On the table.
Good. CAD CPI in 20 seconds. I'm going to start making some plans here. So that is my stop loss level. I am trading on a hyper-growth account, so I do not have news restrictions, but I am not going to be stupid, but maybe a little bit. We'll see. Do low risk on that one, and basically what I do have here is, all right, news is coming out. It's obviously dumping. That is a bit too quick for me. Reported that 2 consensus 1 month higher than expected. Okay, CPI higher, prices going lower as expected, obviously. Now I want to see a retrace. We want to short this, but obviously that move might be gone, but we can look for a retest of that level. So then
so CPI is higher, correct?
Yeah, CPI comes in slightly higher.
So inflation is higher, so they're probably not going to cut rates as soon, are they? So if they're going to hold rates at the level that they're going to hold, that's going to be bullish for CAD in general. So that's why obviously USD CAD is going down.
Yeah.
So yeah, short is a nice idea. Let's have a look at that. You're on USD short, USD CAD.
USD CAD, yeah. That's what we're gonna do.
I would go something, Euro CAD or something like pound CAD, something that is,
But euro looking, but the thing is, USD is at resistance here, and EuroCAD is okay. We're not getting that pullback though.
be patient. I reckon pound CAD, something like that. That's already looking like it's.
Pound CAD is a good one, yeah.
It looks like it's already started its move down. You had this kind of range, this range up here. It's breaking the distribution range, and it's already pushing down. So if we can get on a trade like that,
this is actually interesting. This might be the catalyst of breaking this daily level.
So you've
look at this. This might actually be breaking the whole structure here.
It is very weak, pound CAD.
It's still within the trend though. It's still within the boundaries of the trend, as I see it. So I don't know, but I do definitely agree with you guys that it's putting in a massive possible top formation here, and this might be the catalyst that's going to pull price lower.
There's no way you can get in.
Oh, we can put a stop loss just above here on the hourly. Yeah, I'm gonna do that. It's a GBP CAD. I mean, you're probably gonna make money if you short anything related to the British pound, honestly. So having this momentum is just nice.
So that'd be a nice area where you could see a bounce, which would be the monthly level at 75962, right on that 200 EMA. Wouldn't be surprised if you have like a nice little wick down and then it close above, and that could be if you want to get in long at the wick, so it holds up.
Right. So I entered the position here on GBP CAD. So if you look at, you add a horizontal on that one right there.
Do you want to show your screen, mate, if you've got one?
Am I not showing my screen?
I don't think so.
Well, okay. Can I show my screen? I thought I was showing my screen. Okay, so I entered the position here. Now I know that this is support, but I'm thinking that maybe this is the catalyst that's going to push price lower because of what we have right here. Now remember, this is a low risk play based on possibly. So the stop loss is up here, okay? And what we have here is just before the news event, we came up and we formed almost like a bottom formation here, and we hit that break level. So we had a resistance here, a strong break to the downside. We retested that level right here, and that's where the move originated from. Now we have one resistance here as well. If we fail to hold this resistance and we move like this, then I'll be adding to my position here and moving my stop loss a little bit lower. So for targets, if we zoom out to the daily, and I'm also, to add on this, I'm also long Euro GBP because I do see a big reason to be short at the British pound.
About that pair. Don't talk about that pair in front of me today, okay?
We can talk about that later. If you have, I see this as an interesting level for a TP, right down here.
What level is that? What number?
75.63.
Yeah.
So it says right here, I'm looking at the financial juice here, and it looks like a Canadian swap market sees a 20% chance of a 50 basis point. Why do they have to use those words? Why can't they just say 0.5%? Anyway, 50 basis point Bank of Canada rate cut in December, and this means it's down from 38% before inflation data. This means that the swap market is seeing a lower chance of a 50 basis point Bank of Canada rate cut, which means that the chance, it's adding it's adding more pressure on the Bank of Canada to
Hold rates.
hold rates
Yeah.
a little bit higher, which obviously would be good for the Canadian dollar. And then we have a currency, which is the GBP, which is weak. It's a weak currency, right? So
I think Labour.
we're
I don't know. I think Labour try. They came with their manifesto. They were trying to push growth into the UK. That
raising taxes
by
probably.
raising taxes, which is just ludicrous. I think obviously everybody. There's loads of things going wrong in the UK, in my opinion, at the moment. But one of the things that they are doing is they've been slowly cutting rates already. So that's obviously going to bring the value of the pound down anyway. And plus everything that is going on with taxing and just the government in general. I think people are taking their money away from the UK and they're going to be putting it in other things.
Yeah.
So just sell pounds.
So currently the positions I have open right now is a short on GBP CAD and a long on Euro GBP. And as we can see here, we do see a nice push to the upside on Euro GBP. I will be adding to this position on the 4-hour candle close if it closes like this. I've currently been building this position over the course of the week. I have 2 positions open. I'll be adding a new one on the 4-hour candle close if it just has to be rather somewhat bullish, and preferably I wanted to break above that level. If that happens, I'll move my stop up here as well and add whatever I remove here from the to the new position. So right now, this 2.3R trade would be I'm adding risk, and then it kind of turns into a 4R trade with full risk. So what began as a 2R trade, so we talked about this yesterday, I believe, or maybe on
Yes,
Monday.
we did.
It's Tuesday today, is it?
Yeah, yesterday we talked about it. Yes, Monday.
Yesterday. So I'm like 2 days ago, but that was Sunday. Okay. Maybe I was talking to myself on Sundays. I don't know. I'm pretty sure I talked with somebody about this trade on Sunday. And I talked about how it was a 2R trade. And I explained how averaging into the position, adding to a winning position, and adding and limiting the stop loss once the position is confirmed will increase not only the profits, but it will decrease the risk as well. So while I'll be making more money on this trade, I'll be also making a higher risk to reward, which would be around between 3 and 4. So it's good to know that there's correlation between the 2 trades here, the Euro GBP long and the GBP CAD short. Now, this is a small position, obviously, but there is follow through here, and we have the 1-hour candle closing in 21 minutes. I'm going to look at this 1-hour candle as a break lower. So I'm going to be adding to this position I'm going to be adding to the position on the 1-hour candle close as a breakout trade, and because that confirms the break lower. And this is the beauty of
I'll be looking to
trading
get once that 1 hour closes, I'll be looking for that wick as a small retracement. Obviously, new candle opens, you get the open, then you get a retracement, that's the wick, and then you get the next body going down, which is the continuation. I'm looking to get that 1 hour wick, as you would call it. So the first 15 minutes maybe of that candle, then I'll be looking to getting short. I don't see that happening at the moment because it's still pushing lower. But those are good trades. The reason why I'm so salty on Euro Pound is because I literally have the same trade in mind, and I was in that trade 4 times today with a really tight stop loss, and it was just super wicky. And before it actually moved out of that area, because there was so many times in the day that it was looking that it was going to push out of that range and actually continue higher, but it just held the range and just kept on wicking up and down, and unfortunately took me out 4 times. So
it's interesting, because when you have volatility, the way I survive volatility is by having a wide stop loss, basically. Now I sacrifice a lot of risk to reward, but I do find that a lot of times, especially when I started trading and when I was in the crypto futures market, it was all about making as much money as possible in a short amount of as possible, and with tight stop losses. And then you have the volatility where it's like, okay, get an entry, stop that, get another entry, stop that, get another entry, and then it flies. But like, what if it doesn't come up? Like, what if you don't make money on that idea? What if the idea is just invalidated? You'll keep on getting stop losses, and then all of a sudden you look at the trading account and it's like, okay, I did not plan on making a 10% loss today,
But
Yeah,
that's where the risk management comes into play, because depending on the strategy style, the way you enter, you may because I know exactly what Alex is talking about, because sometimes since we both are aiming to have as tight as possible the stop, inevitably you will get a lot of stop outs when the market doesn't do, when your timing is a little bit off. But that's where the risk management comes into play, because you need to know in advance how many bullets, if you may, you have to try this idea. And once that number is reached, then it's game over. It's not game over, but it's over. I mean, you shouldn't be trying it anymore. And that can be, a couple, and can be up to, I don't know, maybe 10, depending on how much you're risking per shot. But I was looking into that trade, pound CAD, Jonatan, and I really really like it. It doesn't offer me, if I may, I'm going to be showing my graph. It's not a signal for me, but if I look on the higher time frames, on the weekly time frame, we're breaking structure. To me, this is the neckline, this is the structural line on the weekly time frame. And if I look to the left, I don't see anything holding price on the weekly time frame all the way down to this structure, which I haven't marked yet. So there, on the weekly, it's breaking down, and it's doing it from an outside bar. This is very interesting. This is, I put on as a daily structure, but they are actually weekly structures. Let me change that. That was on my bad. But what you can see here is an outside bar, and this is how this kind of price action I want to see at a top, because this is
are we looking
typically,
at which pair? Sorry.
this is pound CAD on the weekly.
Okay.
So I'm on a higher time frame, but I really like the basis, the technical basis of this idea way before right now. I mean, now it's breaking weekly structure, weekly neckline. But how did it start? If this is going to be a top, and it looks like it is, how did it start?
Victor,
It started with
before I forget, can you when you do this analysis, could you give me if you're looking for this like on a higher time frames, what
yes.
would be the target for a high time frame short in your mind?
I would look
Maybe you
at the
can just keep
highest
that in
time
mind
frame.
when.
Yeah, that's
I
gonna
mean,
be at the
just
end of what I was gonna say.
okay.
What
Yes,
I
be
look here
quiet.
is what we have here is a very strong. I zoomed in, but actually we had a very strong on the weekly time frame. All of this is right, very very clear uptrend, and we to me the market is talking clearly by showing what is a very convincing top to being formed. We have an outside bar being formed, right? What does price do? It comes back into some on a lower time frame. This is the structure is on the daily. We're looking at the weekly. It goes back to that order block, which I doesn't look to be very clear. Let me change the background a little bit, make it a little bit more visible, right? It comes back, market forms that outside bar, right? So there's something, they hit on something here. The sellers, they came in, price comes back to retest that same structure, and it shows.
Let's go, new president. Do it.
It shows it signals us that it confirms actually us that this structure, this level, there are sellers coming in, and they did come in, forming another engulfing. All of this is on the weekly, of course, right? And it's hitting now right now it's breaking or violating the neckline on the weekly time frame. And if we look at the
Violating the
left,
neckline, that sounds like, yeah.
Sounds like
Okay,
he's
continue. That's
violating.
weird. It's a weird thing to say, Victor.
it's violating a rule, right? So it's violating the neckline. I don't know what you guys are thinking about, but I'm thinking strictly technical here. The If you look at the to the left, there isn't any on the weekly time frame. There isn't any bullish structures to stop price after breaking this structure, and all the way down to way lower prices at this structure, which is unmarked right now. And so we go to the weekly is not going to tell us any possible place to put your target. If we look at the what do we see if we look at the daily, right? If this is the top, right, and it is it there is a quasi that was formed here, which is this area. Let me mark that. This is the neckline on the daily as well. It's the same line I just mentioned on the weekly, and we're now breaking it. And typically, I'd be waiting for price to come back to some before I short it. So it's not something that I would like to trade it, but it is breaking down very very obviously, very clearly. And the only thing that we have are the daily structures below us for any ideas or indications for the target. So I don't have anything on the weekly to aim for other than just the daily structures, which are these order blocks. To me, that's going to be the first TP or FTA in on the daily time frame. Bear in mind we are at 100% ATR, but then again, this is a CAD pair, and we just had CPI, so it's not uncommon for it to continue breaching, not to say violating, breaching and exceeding that 100% ATR. But the other thing I want to say is, as price is coming down, right, into this structure, this bullish structure, if price is going to, what we typically would expect is, let's zoom into that. What you would expect, this is a demand area, right? Price has come already into it before, had a nice reaction from this structure, this order block I have marked here. What does it do on the second time around? It comes in, and there's no buyers, at least not on the daily time frame, no buyers to be seen, right? There's nothing here that tells us, okay, there is an outside bar here. But as soon as that outside bar was closed, the engulfing comes in. It tells us that the buyers did show some sign of being interested, but very quickly they were overtaken by the sellers. If we go to the lower time frames, do we see there is a quasi here? So there was an attempt. There was an attempt on the H2 for a reversal, right? By reversal I mean this structure, right? There is a reversal here. Price comes back in, but there's nothing. There's no structure here to stop price. And price, what does it do? Very, very weakly, it just forms bearish structures all the way down, even continuing as we speak. So I think it's on the lower time frame. It's showing a lot of weakness. The daily for sure is very bearish, especially considering that it should be getting some buying action. It's not doing that. And it's on the higher time frame, the weekly time frame, it's breaking that structure as well. So once this is broken, as soon as we're getting close to the end of the week, as this week is progressing, it's going to be obvious that the weekly is broken, and that's going to have an influx of sellers. That's what I would expect. So this area would be to me very easily reached, unless we have something changed. But I mean, we just had CPI, so we shouldn't be expecting anything to change in this price action. So my target would be this order block, which would be 176.26 2. I would expect price to go at least interact with that order block before it changes in order flow.
Okay, so we have some news. We got Russia coming out saying that Ukraine's attack is a clear signal that they seek escalation, and Putin has issued warnings. This came out about 6 minutes ago, and we do see right now that the S&P 500 is breaking these lows right here. Now, I did de-risk this position, so not really feeling any major pressure, but we have now broken these lows right here. Looking at Bitcoin, this is the first time that we did see Bitcoin react to this with the daily with the 1 hour candle looking not as good. Now overall the structure is looking good, but if you go back to the daily, we are seeing a pullback here, the 4 hour with a big wick here. So now we're seeing for the first time Bitcoin is reacting, and we do see that the US futures are dropping. So we are definitely seeing a risk off move here, which might mean that the dollar is moving higher. So let's look at the dollar. Now the dollar is actually moving lower. The dollar is actually moving lower. I got an alert here as well saying, yeah, so the S&P 500 is breaking down here. Let's look at USD CAD. We are seeing continuation on the downside here for USD CAD. Was this the trade? No, GBP CAD. Wow, I thought I was in this trade. I was in GBP CAD, not USD CAD. Yes, we're breaking down here. What I'm watching is I've added already 2 times to this. What I'm watching right now in the 1 minute is we are finding support here at a previous support level, now turned resistance. We are currently seeing, this type of trend. If we break below here, I'll be adding to my position and moving stops to entry on the previous 2 positions, and then adding to this one, which it's a very interesting developments right here. I'm curious to see how we move forward here. I had a discussion with another trader today about the fact that long term stuff like this, like war news, is good for equities, which to me makes no sense. But then we started talking about the fact that the U.S. equity market there's a lot of big players in the war industry, and manufacturing is actually picking up in a situation of war. So might actually be good in the midterm, which is to me feels just so wrong. But the overall I would say it's just net bad for everything. But I don't want to be trading, and I don't want to be doing any war trading. Something I don't want to be trading based on those ideas anyway. I always want to follow price action because it would just feel insanely wrong to be profiting of a situation like that. But we'll see what happens with S&P 500. But yeah, look at that. We're stop losses hit. We're breaking down. This is obviously now the U.S. market is opening. This is America is waking up and like, yeah, okay, we want no part of that. And the market is definitely moving lower here. Now, looking at the S&P 500 on a daily basis, though, we are still, still in an uptrend. We're still in an uptrend, even though it looks quite bearish. I want to show you guys something interesting here. We have an interesting article from
Be right back.
Reuters. How do you pronounce that? Reuters.
Yeah, why am I echoing? Can you hear me? Yeah. See you in a minute.
Okay. So an interesting article here with Goldman Sachs forecasting that S&P 500, they have a target of 6,500 by 2025, the end of the year 2025, which is a previous estimate that Morgan Stanley gave out as well. So let's, this is obviously interesting. They're looking for a massive Reuters. That's right, Reuters. That's what I'm trying to, Reuters. Yeah, thank you. So I'm trying to, obviously, if the situation in Russia, Ukraine escalates, not sure how this plays out, but obviously, coming from Goldman Sachs and Morgan Stanley, we have to take that into consideration. But what's interesting here is if we look at where is that 6,500 level, that is up here. From current prices, we're talking about an 11% increase in the S&P 500 during the 2025. It is my day today. My day is going great. I'm making money. And okay, the S&P 500 didn't work out well, but all my other trades are actually looking really, really, really good right now. I'm going to be shortly adding to GBP CAD as well. So
Especially positions.
Yeah. So actually, some of the biggest and best traders in the world are forecasting that the strength of the U.S. economy, combined with a Trump presidency and the effects that tariffs most likely will have on the dollar and the equities market, it looks like they are predicting the S&P 500 to move up during the course of next year. So if we do find any technical, any fundamental reasons for that to happen on our own, and also technical reasons to enter a long on the S&P 500, which I believe is right now. I mean, I'm going to be most likely. I mean, the reason why I moved my stop up here is because I increased my position, and I think maybe that was a mistake, maybe not. But looking at the 4-hour, I don't think that was a mistake, because if we go to the replay tool, this is prior to the missiles being launched. Okay, so that's prior to the missiles being launched. And if that didn't happen, maybe we could be trading up here, and maybe we could establish this as support when that event happened, So all in all, good idea. Lost some money on that one. Doesn't matter. We move on to the next one. But I'm looking at how can I get in? How can I get in here for the next move? Because if you look at this one, I mean, this is a 12% increase on how long? 96 days. That's just insane.
That is indeed insane.
Yeah.
That is a very quick acceleration there. And that's also has to do with election and the perception of how Trump and the expectation of Trump winning, I suppose it was. And now Trump won. So now we want the follow through of that move. And 11, you said the article mentioned you measured 11% of current prices for the end of 2025. Basically, what Goldman and Sachs are saying is that S&P is going to have a positive year next year, and even a little bit higher than average, right? Because 11% is roughly what is it, like a percent or two above historical averages. So they are saying the S&P is going to be just fine. It's going to have a positive year, even a little bit above average. So that's and I think we know that, right, from equities, from historical data, that war times is actually good for the market.
Yeah.
After the initial scare, that you will see that may last a couple of weeks, a couple of months, eventually the net effect is positive for equities. And I'm letting aside, the moral discussion, whether you should feel bad about it or not. I'm just focusing on the technicals and the data. And it's up to each one of us to put a label on it or not.
Yeah. Victor, I'm thinking I'm going to take a break for 10 minutes. Is that all right with you?
Yeah, that's fine. That's fine. I'm going to talk about a little bit. I was before we looked at this, I was looking into, let's see what it was. Gold. Perhaps we can look at gold. I have we have
look
some
at gold, and I'll take a break, and I'll be back in a bit.
Sure. We had at least one viewer asking for us to look at gold, and we're going to be doing just that.
I took some lovely trades on gold these past couple of weeks, like some beautiful. Since Trump got in, gold has been like my go-to. It's been so good to trade.
And you've been shorting it, I suppose?
Yeah, shorting and longing, actually.
Okay, both sides.
But,
okay, nice.
I'll let you go through what you think.
Well, we were talking about this in our Discord sessions. So these ideas were talked about and it didn't come back to offer us, at least not yet, an entry, but we can certainly discuss it, from analyze it, and again, in the light of what's happening, right? The heightened geopolitical tension, and now the escalation today. Although I would say, all of these headlines are very scary, and that's going to be the place to go, is a risk off trade, which is bullish for gold, of course. But let's not forget that we've been having those headlines for many months now, if not years. So so we shouldn't exaggerate it too much. I mean, the gold is not was or is still in the range of the all-time high, and that's because of those headlines. That's because of everything priced in. So this escalation is, yes, an escalation, but I wouldn't expect too much of it, since still nothing really happened. It's just wording, in my opinion. So if we look at gold, of course, we have, it's been very bullish. We've been talking about this. The local top that we've seen on the weekly time frame hasn't left any structure that I would deem as significant. There is that pin bar, of course, and that's significant. But I personally, I don't consider that to be like the you know I would rather have an engulfing there, an outside bar, than just the pin, because the pin, of course, is probably a structure on the lower time frame. So we don't have any top being put in on the weekly time frame, and the structural low is all the way lower here on gold, right. And actually, you could argue it's even a little bit higher, if you consider this bar, but we haven't broken that yet. So the bullishness in gold is, to me, still untouched. But if we look at the lower time frames, from the weekly going to the daily, there was a structure being broken, and that's what we talked about. To me, price did what it was supposed to do after the bullishness we've been having, the not constant but sustained bullishness. It's obvious that price at some point needs to take a breather, and to me, that's what it's been doing, and it has done that. On the daily, if I zoom in, we did break and form a reversal structure, right? We do have this structure, and that's that left shoulder head breaking that neckline, and we're likely going to go up. And the question is, will price complete that reversal structure and pattern? I mean, by reacting to either this order block or the one above it. Personally, I think, because of when we discussed this setup a few days ago, of course, this escalation wasn't in the cards. Although there were rumors already before today. I would say that a gold has done a great move so far, and breaking that structure on the daily could increase the possibility of price going much lower, which makes sense, right? It will be a healthy retracement before price gets back into the bullish trend again, because on the higher time frame, it hasn't broken any structure. So long term, you should be bullish gold, unless until it shows you breaking structures on the even higher time frame as well. On the lower time frame, in the daily, these are the structures that I would expect price to go to, and their price action will tell us if it wants to continue, or if the reversal pattern is going to be completed, and giving us a structure. So an entry, I mean. So to me, there isn't anything here between the structure we left and the target we have above us, which is at 2740 more, give or take a few dollars. The other thing is, if this is going to be a reversal, I don't like to trade this this leg, right? Let me mark this again, right? When you have a daily reversal, I don't like to trade this leg, right? I would rather just wait for, I mean, this leg going into those structures. Typically, that's not a, um, at least when on the higher time frame you don't have such a bullish trend, I wouldn't want to trade this. But this is gold, and gold has been very bullish. So in this case, I would make an exception and trade this. Like normally I wouldn't want to do this, unless we have some extra reason to do so. So this is the leg into that reversal, into that entry order block. I haven't marked let me mark the 50% retracement, but it's very obvious to the eye that this is above 50%. Other than that, if you go to the lower time frames, you can see the buying that has been, well, actually it broke structure on the lower time frames on the H4. The position that I would be waiting, or the setup that I would be waiting, is this. We talked about this. Either the daily time frame, it's going to come back to the daily structure, or since we do have a quasi on the 4 hour, that is a bullish reversal. I would be entering, if price gives me on the lower time frame confirmation on any of these two structures, right? That is for the move up into close to this area. I wouldn't necessarily keep it all the way into it, but that's the idea that I'm looking for gold. So we have a reversal, a bullish reversal. The quasi has been activated, and these two structures are, the places we should be looking for a possible entry into, and targeting the structures on the bigger quasi, right? The daily quasi, which I just mentioned. This, to begin with, this structure, not necessarily all the way to the structure, but reaching it, or at least getting close to it. So that's my take on gold. Very interesting.
I can talk about the trades that I had on gold,
Uh-huh.
and about the mistake as well that I actually made on the last gold trade that I had.
Okay.
It isn't on this particular account, so you're not going to actually see it on here, but I can walk you through the reasons why I got into this trade. So, same kind of idea that you actually talked about. I noticed at the start of the week that we found support at this area of demand. So initially that was a point where I said, okay, we've had such a push down. We're waiting for a retest. We're waiting for a little bit of price to actually have a little bit of a breather and come up. So I came onto the lower time frames, and what I could see was this kind of accumulation type of range that formed. We had a breakup of the range, and then we had this retest as well. Now the retest came onto a 50 fib, so all I did was do that, and as you well know, that's where I got in my entry, which was one here, and then I got another entry here. Now my mistake was, because I've been playing around with trailing stops, I actually trailed my my stop on the lower time frames to here, and this particular candle, which hurts me to say, is the candle that actually took me out of the trade, because my original target was,
Which candle was it?
I'm going to pull up TradingView, because to actually do analysis on this thing
Okay.
is absolutely horrendous, isn't it? I keep trying to let's pull it up. Okay.
All right.
All right.
How's it going, guys? We got some new news coming out. Russia's foreign minister is saying that Russia's position is that nuclear war won't happen, and the U.S. indicates that it will not respond to Russia's nuclear doctrine move. And the Russian foreign minister is also saying that the Russian nuclear doctrine does not differ from the U.S. nuclear doctrine, and we are convinced that nuclear weapons is a deterrent. Okay.
Nice.
So I'll be adding to my GBP CAD trade here, because can I just show you quickly what I had? I know I'm just jumping in here and just taking over, but just to show you guys, this is on the 5 minute right here. We're coming up and we're retesting that level, so I'm adding to the position right here, and
that's where I'm getting in as well.
And I'm also going to I'm also going to be starting to build a new position on the S&P 500 long again.
Nice.
What is that is so you got stopped out, or you de-risked, and
yeah,
what is your trigger? What is your trigger to say this is the area, you know, of value? Prices we are gonna continue here, regroup and continue higher?
Because it's in that daily resistance support, right? So it's within the support, and now Russia is coming out and saying that basically they're saying that our position is that nuclear war will not happen. US comes out and says they're not even going to respond to the nuclear, change in nuclear doctrines. So it seems like as long as it doesn't escalate, this is most likely going to be the bottom of the S&P 500 is what I'm thinking. And if you look at my original stop loss right here, I moved my stop here to de-risk and make sure that I'm out of the market because you never know. If Russia comes out and says yeah, nuclear war will definitely happen. I mean, we're going to see something like that, so I want to be out. Maybe not that, but you know what I'm saying. So de-risking in a situation like that just makes sense. And now we're looking at the reaction to that news is quite bullish. So I'll be looking to get a better entry than my original position here. And now we're looking at this entry, and now it's even going to be. And remember, I'm looking at that target, so I'm looking at a huge move to the upside. But I'm expecting that to happen in a couple of weeks.
I've just got into the pound CAD trade short. It's come to an area that I think is a good area to sell from. Retest of the range lows, also coming into a 50% fib. So that's me tagged into the trade as well. Let me go over to what I was talking about on gold, because it is just such a beautiful trade and you can pick up some really good things on this as well. So obviously with gold pushing down so much, I'm just expecting, or I'm projecting, that price is going to have a retracement of some sort. So if I'm looking for a retracement, the normal retracement that I would take if I'm going long, I'm taking a 50% retracement. So the idea was took the fibs and just wanted to find where the 50% retracement was. So back then, all I did was mark out where the 50% retracement was. Then I looked at where the price was actually at the start of the week, and it was basically on this level there. Went onto the lower time frames, and I could see. Let me get rid of the fib now because that's not relevant. That's not relevant. I saw obviously this accumulation that started around the bottom of that area of demand. So for me, looking at that, it's instantly saying, okay, price is waiting for a retracement up. The 50 fib is attracting it towards it. So that's my kind of interest peaked with gold. Seeing this kind of price movement here, so we've had a breakup between the EMAs. Price is looking extremely strong. That's a really nice move. Whereas you can see price is coiled up, really tight, really fast push up, and a retracement then to a 50 fib. So I had to take my fib to the top, to the bottom, and I got into my first trade here actually. Now, where I was looking for areas to add, basically, I wanted to see when price actually broke this kind of trend line. That was the rejection. That is when the retest, that is when I added to the position. The problem is I was actually on the 5-minute chart and I was trailing my stop quite closely. And even though the take profit was actually all the way up there, I trailed it so much that this candle, I actually trailed it all the way up to here. And this particular candle actually came out and took me out. So it was a really mismanaged trade that actually cost me a few $1,000 by the looks of it. So it actually cost me about $2,000. I ended up taking only 1,500 off the trade, and I left the rest off. But I wouldn't be surprised in general. I actually think that gold is actually going to come down a little bit. I'll be actually looking for areas to actually short this, to be honest. I know people are looking at it to continue up, but we've had a change in trends. Like, you've had this beautiful uptrend for how long? Since, August, this 4-hour uptrend. We've had a change in trend. We've had price make a blow off top. We've got a shoulder, a head, and another shoulder. You've had a break below it. Trump has come out. We've had a break below it. I actually shorted this move as well, and that was on the MT5 and the 5ers on the 5ers account. And now it is continually coming back to the 21 EMA on the 4-hour. This is interesting though, because we have seen quite a strong push up, but it still doesn't take away that we've actually had quite a big change of trend, and the way that the markets are looking in general, they are looking at taking risk off and putting risk on. And that's why I don't think that we're going to see gold pop up to these higher levels anytime soon. I do think we're going to maybe come down. It could turn into your idea, Victor, that price will actually something, play around here, start coming down, find a little bit of support, and then start, coming up, and then we can get into that kind of trade idea and start traveling back up like that. But I don't think this is going to be the move that just starts going like that and we're going to see higher. Price just doesn't do that. If it does do that, well, you're going to be sidelined anyway, because you've got no way of getting in long as well, unless you're being super risky. So that's what I was looking at on gold.
Yeah, I would be buying gold when it comes back to that daily order block that I mentioned, which is below us. And if not, then I'll just let it run. I have no problem letting it run without me. There was something on S&P that I would like to address. Let me change to my screen. If we look at the S&P has been very difficult to catch a long trades, because it's, at least for me, because it's been so bullish. It hasn't had many retracements into it. That we did have on a monthly time frame. We did have one wick coming into supply zone. That's where I actually bought some for my long-term portfolio. But it has been, you needed to be very patient if you wanted. I mean, if you're dollar averaging into it, then it's okay. But I mean, if you're trying to pinpoint your entries, it didn't offer us many entries in the last couple of year or so, but just one or two. But what we do see is that finally we have price. We have an order block that has been formed on the monthly time frame. We are only 10 days away from the end of the month, so that's going to be interesting if we have any move lower into that supply zone by next month, by December. If we do, then that could be a nice area to get in based on the monthly time frame. But if it doesn't, even if it doesn't, we are currently very close to that demand area on the weekly as well. So even if it doesn't reach that monthly order block, you have enough reasons to look for entries on the weekly time frame because of that structure we're getting into. And for anyone who knows what I look for, tell us in the chat what is this kind of a price action? For those who have been viewers of our stream, live stream for a couple of times at least, we talked about this all the time. I'm gonna check
Can I
the
answer?
chat to see.
This is get
Okay.
the F out of the way.
No, let's
going up.
let's. It's an order block, but it's something more than an order block.
Yes, it is.
It's
something
it's
more than
something,
order
it's
block.
something outside of an order block.
Yep.
Let's
All
see
right,
if the
I'm going
break
to.
is no, give it a second. Give it a second. Let's see if it if they have it.
This
All
is
right.
a supply block.
A what?
It's
A
a
supply
super
block.
order block.
A
Super order block.
Super, that's
Super order block.
engulfing candle. This is close. This is close. It's an engulfing candle on steroids.
Yes. Yes, indeed. And there you go.
There you go.
Haresh and yep. Haresh knows it. Yes, it's an order block. It is. It's an engulfing gas, but it's more than just that. It's an outside bar, and that's a very interesting area you want to be watching, because typically it's an outside bar is indicative of trap traders, right? Traders who thought price would go one way and they get trapped because price goes way the other side. They get trapped and they need to liquidate their positions. That's what creates an outside bar. And we have that outside bar, which indicates a lot of selling, a lot of buyer came into the market in this area, and they're likely to do that again. Everything remaining equal, of course, right? I'm not no escalating anywhere else, but I mean, if we have the current geopolitical situation stays the same, then we should see buyers coming in and defending this weekly order block. So it's very interesting. We're getting very close to it, and typically in Forex you would see those order blocks being retested much deeper. In the equities market, which is trending very strongly, it doesn't get that deep, so it might just interact with the upper border of that weekly order block, and that's it, maybe, or perhaps it goes deeper. In this case, I don't, of course, I don't have a crystal ball. I don't know how deep it's going to go, but what I can say is that buyers will be defending this structure. So on the monthly, we have a structure below us, quite lower, but we do have a structure. We have a weekly structure as well that we're nearing, and we have a bullish quasi, right? We have an established downtrend, right, which broke the neckline, and we're getting back into area. The only thing is we don't have many order blocks to use. There's only one on the daily, which is all the way on the lower edge or lower section of that weekly order block, but it is within the monthly. So I don't think it's going to go that low, but who knows? Maybe it will. If it will, that's going to be the place where I'm going to be ready to pull the trigger. I know it's much deeper, much lower than your setup, Jonatan, but that's typical how we differ, right? You typically get in with a break and retest, and I need a much deeper retracement to get into the trade. So I would be looking for something like this if it happens. And then I know that you would typically take this because that's the break and retest. But to me, this I know this doesn't happen very often, but if it does happen, that's where I want to be a buyer. And this is a great area. And even if it doesn't go at this deep, what I would be looking for is a structure new to be formed, right? So this, I wouldn't be using the current quasi, but I would be waiting for a daily signal coming here. So pricing forming bullish structures, fresh structures coming back to retest them within that weekly order block, perhaps touching that monthly, who knows? And then that's going to be my signal to get in. So it's very interesting for S&P. It hasn't offered us an entry, at least not to me, being very selective. It hasn't offered me many entries in the last couple of months, but this looks very promising.
The CAD trade. I'm just going to jump over and show the CAD trade.
Oh, it's breaking down. Is that CAD? Is that GBP CAD?
Yeah. So
nice. I'm going to be adding on that one because it's breaking down now.
Pinpoint from the 50 fib, just You can't really get better than that. The only thing that would be even nicer if it would actually hit the 200 EMA, and that would have been, 200 EMA on a 50 fib. That's lots of different confluences on there. But we see now price, has already had this massive move. We've had a trickle up into a 50 fib, into the bottom of the range, and now it looks like it's actually getting weaker. You can see that it's broken its in a trend line right there. So hit the like button, guys. Whoever Henry said that, so I think you guys should do that as well. That's a really good idea.
We do have quite a lot of viewers here now. Obviously, you like what we're doing here, and well, if you like what we're doing, you should like it more. Like click the like. That's what I'm trying to say. Click it. Click the like.
I'm gonna be taking a short break, guys, and when I come back, if we have time, I'll talk about the quasi. So I'll be right back.
Check this out, guys. Look at it.
Yeah, nobody can.
Come on, focus.
Yeah, that's
focus. Come on, focus.
Ooh, wow. God, you're addicted. This is too much. Absolutely dreadful. I don't know if you guys...
Did you see that focus with like focused in and out? That's the cinema shit like that. That's some good stuff. Let me just show you.
One thing.
This is GBP CAD right here. Look at that. Look at that retest.
And you were going to take USD CAD. Why would you have taken USD CAD, man? Honestly.
Because it looks
done the same thing.
really nice though. It looks pretty good, man. Look at that. Man, I should have seen that. Look at that 5-minute bearish engulfing candle right there. That is beautiful right there. Let's put the EMAs on. Look at that 20 EMA in 5 minutes. Man, that looks great. He's calling the market makers. Dump it. At least remove your camera before you're answering the phone. Is he listening to what I'm saying? Problem. Hello, Alex.
That was just my broker saying that we have to go 200 lots.
That's the margin call right there. But look at this. This is why I looked at USD CAD. Look at the momentum. Like, let's compare USD CAD with GBP CAD. The momentum on USD CAD is... let's not do that. Let's add it right here. This is why I wanted to go with USD CAD, because look at that retest. That is beautiful right there. We're having the same retest on GBP CAD level.
Yeah, like which do you prefer to short? You prefer to short a currency that is weak against the currency that is strong at the moment, or do you want to short
look at this
currency that is strong against another currency that's strong?
Dude, look at this. That's 2 short signals on the indicator. God damn it! I wish I had that on. I should have had that on. Is it on GBP as well? Let us see. Maybe it is. If we see a short signal here as well, I'm going to be adding. It's loading. No, that's not a short signal. You see, that's the difference. I think USD CAD was the move. Because now we have risk on coming back with the comments. We do see the S&P 500 here being, putting in a possible bottom. We see the dollar currency index is moving lower. This is exactly what I said, right? We have the dollar currency index putting in a possible top formation. So I think hopefully USD CAD, GBP CAD is lagging behind. But look at that move, man. Look at that move.
Yeah, really nice.
I could have easily just gotten in on this, Yep. That would have been a quick 1.5 hour. Well, whatever. I should have, lesson learned, I should have taken both. But I
yes.
But look at the perfect retest though at that level. That's just beautiful. And then they have the 20 EMA right there, adding you got the stochastics RSI here as well. Yep, looking pretty good. Looking very good.
How many of you guys look at round numbers in your trading? Does anybody actually
people
look
look
at
at
round
round
numbers?
numbers?
So, I didn't really look into round numbers that much. Obviously, I keep aware of them on the big numbers of like 50K on Bitcoin and 20K and stuff like that. But if you really notice, round numbers, especially on Forex, especially on equities, they really do hold some good weight, So I'm just going to put on the screen, and we're just going to go through. As soon as you see this, you really does add to some of the tools in your trading arsenal. I'm just going to pull up Trading View, and this is going to be just until Victor comes, so he can then talk about his quasi. I'm going to close that MT5, and I'm just going to let that run, and we'll see what happens.
To bring up this comment, not sure what that channel is, but you guys should definitely check it out.
Okay, well, look, we're going to just do this on Bitcoin, and you're just going to see some of the beauty of some of these round numbers. Let me just get rid of all of these indicators.
I think before you go into that, I think the round numbers. I think that comes from from outside the trading world, because we as traders, we look at levels and risk to reward ratio. We don't really I don't care what number we're going to, but I think institutional traders, banks, and like investors, they do look at round numbers.
They do, but also round numbers is also very easy to add into algorithms and many different things like that as well. You know? But I was just looking, even on euro dollar, this is just Bitcoin. And if we have a look on the daily, just the round numbers, 70K, 60K, 50K, just these areas were just absolutely.
Look at how 60K was the middle of the range. That's quite interesting.
Yeah, and it's just all of these different. Get rid of that. Don't know what that is. All of these areas that get tagged, all of these are just psychological numbers. Yeah. And if you keep those just in the back of your head when you're trading, they're really good areas where you can find lower time frame trades off as well. And I was just looking at this the other day. And even, let's say, if we even go on to if we go on to the dollar as well, the same thing, just these areas of just 1-200, 1-100, and all of this, you can really find some really nice lower time frame trades. And we're going to go in right now before Victor comes, and then we'll be able to see what we can find off those levels. So just look at the pivots that we actually get from those types of round numbers. Even that on the first kind of touch on that area, that is on a lower time frame. That is a really nice area to trade from. If we go on to, let's say, the 5-minute, and that's why I want people just to go in and have a look at some of these round numbers, these psychological numbers, and play around and see what you can actually find from them. So we've got that range. Let's see what happens. Break from the range. Let's say the trade would be, well, we've already seen what happens, but like we normally do, you've got a break of the range, retest, continuation trade. That is just the simplest thing that you can actually do from these levels. Let's say if you even get, okay, I'm going to go try and get a fib off that. We're going to get long on the 50 fib. Let's see if we can get one. I don't think we even get in. Don't even get in. It's quite powerful. Let's see if we can get in like this. Let's say we buy that. Doesn't work.
I love how when you have an idea and you want to explain it and want to show how to trade it, and it's like, all right, that one didn't work. This one didn't work.
Look how lagging it is. What is that? Okay. Anyway, So let's say we've got that now. We're going to take, let's put the fib retracement back on, because this is the idea. We're going to get out of the top of the fib here, okay? So we're going to just mark out this level. And I know this is going to work because we've just seen it, but this is just, I've seen this a lot now with around these psychological levels. If you go onto the lower time frames and just play around with testing some of these out, even if you'd have your stop, let's say under this push candle, they're just, you know, super nice areas to trade from. Let's see if we've got another kind of example. Even on this first touch, let's have a look at this first touch. We'll go to the replay. We'll go to the 15-minute. We'll get rid of this blinking. So it's had the touch. While it's reaching these kind of levels, all we're looking for is just a proper rejection. You've already seen a range. Now, for us looking at that, we're going to do the exact same thing. You've got the range. We want to break the range, retest continuation. That, for me, isn't a good enough break, in all honesty. That would probably be a good enough break. Let's see what happens here. Okay, well, I've missed that. Anyway, that would have been the exact same trade that we've just done. You've just gone and got that as well on a different time frame on the 15-minute. So I'm just saying, play around with these ideas, because they're little places where, you know, we don't really look at, because who looks at psychological numbers that much? But yeah, go and play around with it, and I'm going to see you guys soon because I've got to go.
All right, good.
Okay,
Left us with some really good educational, some homework as well.
Yeah, man, definitely. Tell me how it goes if anybody finds any good trade.
Look at that! Look at that trade. Look at that USD CAD, the trade that I didn't enter.
Go on pound CAD. Let's see what pound CAD's doing.
Nice. Okay, that looks good. I'm gonna add to this. Now what I'm gonna do is I'm gonna be moving my stop loss down here based on the lower time frames, and now I'm gonna be adding a bigger position.
I'm gonna see you guys soon. Okay, see you next week.
All right. Thank you, Alex.
Yeah, see you next week. Yeah, that's next. Yeah, next week. Take care.
Wow, I nearly ended the stream then. Whoa. Bye.
All right, take care. All right, so I think, I think moving the stop loss here kind of makes sense. I'm going to be adding a position here, reducing risk to, so which one is this? GBP CAD. Here are all the orders here. This will be my 5th position on this one.
Look at that outside bar on the H1, right? We talked about this. It is at a supply zone on the higher time frames. It's not supposed to be showing that kind of selling pressure. If it does, that's a very clear sign that the market are probably most likely not going to respect that supply zone, and that demand zone, and they're going to break much lower. And that's exactly why I like this trade. It's telling, it's very technically clear what it wants to do. It's signaling you, in obvious terms, what its intention is.
Yeah. Okay, so I'm going to be moving stop loss down on the other trades as well, and then I have to calculate what my open risk is, which I'm thinking is actually not that high, which is good. We got a few positions on GBP CAD, and I'm in quite good profit on the entry that I had up here, so I could close that one, and that would significantly lower risk on the whole setup. So I would take some profits, secure some profits, and that would significantly lower risk on everything. But if we look at the lower time frames here, we do have, we do have a pretty good structure here, especially on the 5-minute right here. And if we break these lows, that's a reason to add to the position and then move stops to start moving the stops even further down. That's probably what I will be doing this one. So look at USD CAD again. There is, yeah, it looks good. Okay. What else? I'm in Euro GBP as well. Looks like we're putting in a possible top here on the lower time frames. Looking at the 1 hour, that's because we're at this resistance right here. But I do like what I'm seeing here, and I currently have my stop loss right here now. Or did I move it here? I can't. I gotta look that up after the live stream and make sure I have everything covered in terms of risk here. And the same thing goes for Euro GBP. I'm in quite, because I entered the position down here, which means I'm in quite good profit on that one, so I can close that one and then also limit the risk on the whole setup while making some.
So how much are you risking right now?
On each of these positions, I think,
in our terms.
In our terms, well, so you're saying like if 1 R is full R.
Yes.
So right now, I guess on this one, I'm about probably around 75% of my risk of this setup. Okay. So about 0.75 R. So I got 25% more to add to this position. On GBP CAD, I'm in with full risk. Okay. So GBP CAD, I'm in with full risk, but I've now also, moved my stops down, which means I've reduced risk overall, and then when I break this level, yeah.
But you lower your risk or your stop loss. You lower your stop loss, but with the intention to add, I suppose.
Yeah, in this case, yes.
Okay.
And also looking at the structure here, if you look at the 1 hour or I think the 50 minutes is most clear. Obviously, if we have a move like this and then have like a double bottom and then move higher, yeah, I probably want to get out of this one anyway, because now the move that we had here was the move based on the CAD CPI news. And now what I want to do is I want to see retesting that level, and then I want to see follow through to the downside. If we can see that follow through, that means that this was the move from CPI, and now the market just is going to reverse that, and doesn't matter,
Yeah, I understand that point. And how would you make that decision? Whether what is your cutoff point in terms of time for the follow through to be recognized or not? Do you wait to the end of this day, or do you wait for certain candlestick formation to conclude, okay, this follow through is not happening, for example?
I think if this 4 hour candle closes as a bullish candle, then I would say that I would probably look at exiting this one, because if we go out to the daily and zoom out, we actually do have high time frame support here. So if we're not able to confidently break this support level to the downside, then I don't see this trade working out.
Okay.
So I need to see follow through within, I guess, the next 3 or 4 hours to really believe that this has some good merits. And if I add a level here, because I believe that the 4 hour candle is going to close, I think it's here, 4, 5, 6, 7. Yeah, so it's going to close here. Now you can see that from this time to that time, there's a lot of market structure and a lot of structure that is going to be printed on the 15-minute. And on the 15-minute, I would love to see this. If we start ranging here on the 15-minute, that means that we're using this level as support. So if I see this on the 4 hour candle close, then it means that we haven't broken support. We're just potentially accumulating down here. And
So what you're looking for is, if the momentum is sustained, right? The downside momentum, you want to see maybe at a lower rate, but you want it to continue going lower. If it starts ranging, you would assume that that means that the momentum is lost, and it's probably going to be bouncing from these places going forward.
Yeah, and the momentum is here. I mean, we can definitely see that the momentum is here. And we also have another pair like USD CAD, where we see that GBP CAD is kind of lagging behind USD CAD, and USD CAD is now breaking these lows. Well, about to break the lows. We broke, at least on the 50 minutes, we broke those lows. So the momentum is here. There's definitely CAD weakness. We can also go to, we can take a look at something like, let me open this up. Just give me a second. Start with that one, and then I'll take a look at a currency strength meter. And here we can see have CAD showing obvious weakness right here. Interestingly enough, though, on this currency strength meter, we are also seeing strength coming in for the pound and the USD. I'm not really sure what time frame this is based on. I think it's updated every 30 minutes. No, it's actually every minute. I'm not sure exactly what this is calculated, but from what I see, it's quite accurate looking at like intraday price action. This is quite accurate. So what we're seeing now is obviously we have CHF and the euro being two very weak currencies, but we are seeing CAD weakening while GBP is actually
strengthening.
So I'm shorting this one versus CAD, which, looking at the currency strength meter, makes no sense.
But what time frame you said? Do we know what time frame this is?
I'm not sure. I have to look into this. I need to look into this. I'm gonna see if I can find the specific details on what this is based on, but it's interesting to look at.
It's important to have the clarity as to what time frame exactly this is measuring.
It says that it's based on the daily time frame, and I think it's based on the daily time frame as well.
Okay.
All right, guys, let's do the giveaway, because I got something I need to take care of here in about 10-15 minutes. So we'll do the giveaway, and perhaps we'll end the live stream a little bit earlier. But now we are actually seeing that GBP CAD is putting in the momentum to the upside is coming back, and it's quite strong. We see here on the 1 minute that it's finding. We had this range, and then it kind of broke up, retested this level, and now it's below here again and moving higher. So we'll see what happens here. Be interesting to see how. And now we're seeing also euro. So it looks like there's some GBP strength coming into the market here. So we'll see how that develops. And then tomorrow morning we have the inflation rate for the UK as well. So that's going to be interesting.
Maybe before we go to the giveaways, I can show a little setup that I love taking on GU. Let me. I will show my chart. Right. So what I see here is, of course, we have a supply zone given by all the demand zone, the bullish structure that have been forming below here, and this is the other side, right? That's the next station. This was already formed. This bearish outside bar was formed way before we start going up. Of course, this is the retest, and price reacted quite nicely. I'm gonna be using this. This move is a very, very nicely you could have anticipated that very nicely. But today we had this H4 order block, which was formed, and price came back within a mid single digit number of bars since its creation. So that automatically makes me want to look for an entry reason, right, within that H4 order block. And if we go to the lower time frames, let's say on the H2, I didn't find anything. On the H1, we did have an order block here, but it wasn't part of a quasi, so I didn't use that. What I did do is, because I didn't have anything to the left, what I did is I waited for something new, some new price action, new structure to be formed, and we did that, get that in the form of an H1 order block, which was this one, this order block, right? And of course, it was fresh. It was something that was created just a few bars ago. And to me, that gives me the opportunity to trade between these two, where there's overlap between the H1 and the H4, right? That alignment is what I need for an entry. And if we look at when you go to the lower time frames, the entry order blocks, I mean, this can be, more beautiful than this. We have the quasi for that. If you were who asked what is a quasi? A quasi is a variant of the head and shoulder reversal pattern. It's just not as symmetrical as the head and shoulder. In fact, that's the definition. It's an asymmetrical head and shoulder, which is you have the in this case that would be the let me see, on this time frame. Let me get this straight. To me, that would be the this would be the left shoulder. Left shoulder. You have an established downtrend, lower high, lower low. We break the neckline, right, by that line, and we come back to retest some structure below us. And this, I trade many time frames at the same time, but you can see this was an entry on the 5-minute. It was also on the 1 minute, and you can see how price comes back and respects without invalidating the structures. The last one in this case it was, and reacts up to the height of the structure again, which is the first TP of the setup. You can go even to the 1 minute, and that's why I like. I said it. This is so beautiful. You can see how this area, this order block, right? We had that, or I had this all the way from the moment the quasi was formed, and quasi short for Quasimodo, by the way. So what does it do? Price comes all the way to that last order block, and that's where the buyers come in, and that would be the trigger for me to get into the market, targeting for the first target these highs, either the order block or something of interest in here. And that's very, very beautiful reaction we had from that order block to the top of that structure, which is exactly how it it should move when the market reacts to the structures the correct way, right? If you would have caught something in that range with a stop loss below it, and you target the height of it, even front run that's easily, and this is not very precise, by the way. Typically you can get in with this is a 10 pip, but you can take these trades with sometimes 3 pips, and you can imagine what kind of risk reward you would be getting, something in this range more or less, right? If you get, this is a 5 pip and stop loss, targeting this without using the higher time frame. This is just on the minutes, right? You can still target the next station on the higher time frames, which would be, of course, let me mark this. That would be, of course, let me get, if I can, there we go. You take the next, which is the next station would be the H4 order block we have above us, which is this. That you can target that, which is, of course, 26.64 more or less. And if we do that, right, that's going to be that kind of a trade. I don't know if that's going to happen necessarily, hit target. The first one will be the top of the structure. That's the trade that I wanted to show.
Yes, great analysis, and yeah, that's really good. That would be a great entry right there. like it's very close to invalidation, but we have to do the giveaway right now. I know that a lot of people are waiting for the giveaway, so I'm gonna be not the giveaway link is in the description. If you haven't had time to go through the giveaway, it's in the description. And if you're not winning this giveaway today, we're gonna have another one tomorrow. So, and tomorrow we're also joined by Saul, which is the CEO of the company. We're going to do some live trading with him, and it's going to be only me and him because Victor has the day off tomorrow. So it's going to be me and Saul. I'm going to do some live trading, live scalping. Okay, let's do this.
This is exciting.
Well, let's. Okay, Avi V, congratulations. Nice. There we go. I'm going to be sending these over to the team today. Well, tomorrow I'll be sending the winners over so that you'll be able to get your code, get your account, and set it all up for your new 20K bootcamp evaluation. Well, I would like to thank you all for joining here today, and please join us tomorrow as well, as we're joined by Saul, the CEO of the 5ers, for some live scalping. Congrats, Avi, and thanks everyone for joining, and see you all tomorrow.
Yes, I will be indeed not tomorrow present in the live stream. That's a weird kind of sequence of words in there, but it's going to be exciting to see the CEO trade live in front of everyone, because he's a great trader, and it's very nice to see how he uses a naked chart. But even with a naked chart, to him it's not naked, it has a lot of information. So if there's a lot of learning opportunities for everyone to see someone seasoned as Saul to trade live. For everyone who is interested, we will be in about 45 minutes live within Discord. we'll be holding a live stream there. If you're not part of the Discord community yet, you're missing out. So get your account with the 5ers and enter our community. You would love it. I'll guarantee you that. So that's it. Thank you for being here, and see you guys soon again. Bye-bye.
That's it. Take care, guys. Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at the 5ers. We'll see you in the next one.